It took Tesla 16 years to become profitable. How long is it going to take NIO?
你不可能让一个4岁、5岁的
You can't ask a 4 or 5-year-old toddler to make money. I think it's quite difficult. If you look at Tesla, it has been established for 16 years. NIO has only been established for over 4 years. I'm sure that we don't need over a decade to make profit.
Could Li Bin, the CEO of NIO, be right about the assumption that NIO could turn profitable before Tesla? Well, as you know, I have this Napkin business case about NIO, and in that one, I'm quite conservative. If you look at it, I'm assuming NIO turns profitable in 2024. However, this year in 2020, we had such amazing news about the Q2 earnings to Q3 earnings, in which we saw insanely improved margins, both on vehicle margins as well as gross margins. And so let's take a deeper look and think about when could NIO actually turn a profit. And in order to do that, I made a quick update on my 2021 Napkin business case. So this is brand new. I also shared it with my patrons already. I'm also working on a bigger update, including 2025 till 2030. So feel free to join our Patreon if you want to know it first. But anyways, let's have a look at this theoretical example here. This is well, still work in progress, so take it with a pinch of salt. It's more about a thought experiment here. It's no way meant in order to kind of push the stock right now or to create too bullish assumptions here. Instead, I just want to have a look on, based on what we've learned in 2020, could be actually realistic for NIO in 2021. So as you can see here, the total vehicles sold in 2021, I calculated for around 84,000, but this is still the same that I had in my initial Napkin case, so it's quite conservative here. Again, I think in a best case you could make more than 90,000 sales. And also because there are big numbers flying around, let's put this into perspective. This would be a 100% year-on-year growth, so that would be massive scale, massive improvement. So the vehicles sold, I think in Q1 will be quite low. The 9,000 vehicles sold that I'm giving here might actually be a little bit too low, but this is another thing that I want to talk about, which is that the automotive industry is a cyclical industry. That means in Q1 and Q2 you need to expect lower deliveries, and that will be for all of the manufacturers, including Tesla. And remember this when in Q1 maybe others are starting to spread fear, uncertainty and doubt because well, usually short sellers really like to steal your shares during that time when the deliveries are low, but this is actually a quite normal progress. You see that this will ramp up over the year. This could be actually a little bit more flat than here in my example, so they could actually be selling more in Q1 because of course they have this pent up demand. But generally, let's set expectations quite low for Q1. So anyways, back to the numbers here. That would result in a total of around 4.2 billion revenues next year. And what I'm calculating here is that they also increase the other revenues. So for instance, stuff that are selling on the app, for instance, home charges, or also revenues from the battery swapping and charging business. So in total, I expect the other revenues to reach 9% of the total revenues by the Q4 2021. And also that the vehicle margin, now this is important, will go up to almost 20%. So we are now already at around 14% of the vehicle margins, and with increased scales, I'm expecting that they can actually increase that even more. Of course, at some point in time, this will gradually top out or the increases will get less, but I think those high double-digit growth numbers, margin numbers here should be realistic. Also, I'm expecting that they even improve on the gross margin. So right now it's around about at 10%. So today 10% of the revenues NIO can keep as a gross profit. And I expect that this could actually go up to 15% because they have these improvements under the hood, hopefully. So in total for Q4 2021, that would mean around $245 million that they get in gross profit based on 1.6 billion total revenues and a 15% gross margin. Now, the important factor here is how high will the cost be for NIO in 2021? There are many variables to this. For instance, how much will they spend on marketing, on SG&A, like sales processes as well as on R&D cost. Now I'm calculating here with operational costs in the beginning of around 200 million, going up to 225 million. And it's round about what we've seen in previous quarters in 2020. And that's a huge improvement already from the years 2019 and 2018, where they were in the progress of scaling up everything. And NIO was actually also quite cost ineffective, to be honest. And now the big question is, like, when they scale up and produce more cars, will they also have to increase the cost dramatically or not? And essentially, I think this is pretty much in NIO's hands. If they decide they want to dedicate more cost to R&D, so for instance, ramping up their autonomous driving R&D, then that would definitely have a big impact on those operating costs. Also, if they decide next year already that they, for instance, start producing their own, start building their own factory, that would also have huge implications on that, and that would definitely make all of these calculations obsolete here. However, if they keep it like that, and I think NIO really has it in their own hands, then I think in Q4 2021 they could actually show a profit here of round about 20 million. And that would be NIO's first profitable quarter ever, and pretty soon in their early development of the company. And the cool factor here is also that some of those R&D costs or stuff like that that would have implication on this perceived profit here, they could actually also strategically do that in Q2 and Q3 in order to show this Q4 profit if they would like to. Because I think in Q4 is the highest likelihood. I think they could sell up to 30,000 cars in Q4 in 2020. As I mentioned before, maybe this curve is less steep and it's actually less. But I think these calculations here show you that NIO could turn a profit as soon as they are ramping to 30,000 cars to 40,000 cars per quarter delivered. I think that is the outcome here. But how likely is that? So I think for the vehicle revenues as well as the other revenues, my assumptions here are quite likely or very likely that they are actually true next year. For the gross margin, I think that's a bigger jump to improve that much. So I would put it at a likely. For the cost side, I think it's not really likely, but there is a chance for it. So I want to just give you this information because that's possibly something that most analysts out there possibly haven't even included in their price targets and also their research, because usually we are thinking about the annual profit base, and let's be clear about this. If they show a quarterly profit, that is still far away from an annual profit. However, this big news about a profit of NIO in Q4 2021, that would definitely have positive implications, for instance, on the share price. But as mentioned before, I think let's go slow about it. This is more a theoretical example. I think it is possible if they really want to, but it's really up to what Li Bin and NIO really want to do about it, because there's two things to consider. For one, the current strategic partnership with JAC, which also needs to be renegotiated and extended. I'm a big fan of that they keep this model like that because it saves costs. So this is why NIO can scale so fast. For instance, if you compare it here with what Tesla did at the same age of the company compared to NIO, we can see that NIO is actually scaling faster than Tesla. And this is obviously also due to the fact that the EV industry is now more sophisticated and ripe for this kind of progress. However, still it's impressive for NIO, and I would like them to keep on going with this model and not build their own factory. So this way they could also earlier show a profit. And a second thing to consider is the context of Li Bin, who is really an internet entrepreneur. So he founded a couple of platform businesses before, and also in some social media comments, he kind of, he has a similar thought, I think, like Amazon, about reinvesting all the cash flow and profits coming in into actually growth of the company. So that's, for instance, how he talks about the battery swapping issue. He says, like, as soon as it helps the users to be better, have a better experience and so on, it's actually worth the investment, even though it's not profitable from the very beginning. So I think it's maybe not really on top of the agenda of Li Bin to be super profitable early on, but a quarterly profit, why not? Why not show that to investors already maybe next year, by the end of next year, if it's possible and in the books? So with that, let's close it with another part of the clip, which gives us also some context of, how quick this has been going this year so far, and where NIO has been a couple of months ago and where they are now.
Your shares right now are trading at about $2.06 a share. That's the lowest ever as a public company.
Yeah.
Is this warranted? Do you feel like investors are missing something perhaps?
我想肯定我们的长期的价值
I think our investors don't understand our long-term value. For the standpoint of NIO, we have faith in our long-term value. There are complicated reasons led to the stock rise and fall, which is beyond our control. It's a very complicated thing, especially if there is a short-selling mechanism in the US.
So I hope you enjoyed this. Please smash the thumbs up, subscribe to the channel, and stay tuned for the next one.